Oh, I'm muted. Ladies and gentlemen, welcome to the Big Tech Frenzy. We're mixing up the name. Someone told me that the Big Tech Frenzy is what they prefer to call it. Let me know what you guys' thoughts are, and we'll change it to that. He's late as usual. You said this after I was live. I'm already here. Hopefully everyone's doing well. I bought some stock today. Bought some stock before 10 a.m. Ended up buying Nvidia shares for $113.75, adding on to my already existing share base. But yeah, love getting a good discount based on tariffs that are supposed to strike down in Mexico and Canada. And then by the end of the day, whenever the market ended up closing, both Mexico and Canada ended up delaying those tariffs for 30 days and starting the negotiations with the United States. So this means that some of the border concerns are actually getting cleared up. Gig bought some Nvidia shares too. Nice. Yeah, honestly, I think it's maybe like the more I look at Nvidia, I'm like, this might be the cheapest Mag 7 company that there is right now. And I think that because there was such a large run up over time, that a lot of people look at it as very expensive. But one, the pricing on this company's free cash flow is one of the lowest in the Mag 7s right now. And we haven't even seen Q4. So some people are comparing the valuation metrics of a post Q4, seeing the financial growth, and then comparing that to Nvidia's, like Meta, for example, is also very cheap. But whenever you compare it to Apple, for example, price to free cash flow, and you're getting into similar metrics, I think last I checked, here, let me bring this up really quickly so then we can get an even playing field here. Who was it? It was, yeah, that's okay. I think Koifin put out a report on this today, and I was like, man, this is mind blowing. So let me just show you this really quickly. Okay, so if we go down to Apple with a market cap of essentially 3.5 billion, or sorry, trillion, at a price of free cash flow of 36.1x. Okay. But that is, as of this screenshot, assuming that they took it today, was a post Q4 upgrade. So you get to see the growth, not much, of what they ended up bringing in price to free cash flow, 36x. The most expensive one by far is obviously Tesla. We know that. You're not buying it for its financials of today. You're betting on the future. Amazon, 58x, 44x for Google, which is actually very cheap. Meta, 32 times, okay, for price to free cash flow. And Microsoft, 44 times. And Nvidia, 52x. But the growth rate is insane. And so I think a lot of this run up, people saw that the valuation got way out of whack. And obviously that was really pricing in forward growth, because LTM last 12 months is not the same as next 12 months. So if you're only looking at it through this way, then, the growth companies like Tesla can afford to hold up a much higher rate because people think that the, free cash flow will come later. But that is, twofold for companies like Meta, Google, but especially Nvidia, where not only is growth expected to come in later years to come, and I mean multiples, making 2-3x what they're making today, but also, and this is what the market isn't believing, but the fact is that it's being priced as if there is moderate growth, or that there's going to be just a little bit more growth. But whenever you start getting into pricing metrics of 52 times price to free cash flow versus nearly a 40x on Apple, it just blows my mind. And this is where, for example, like Steve said, oh, you got to be crazy to be bearish on Apple. I'm like, no, I'm bearish on Apple. I love the ecosystem. I don't think that they're, the amount of money that they can make each quarter is going to go down. I think that, service revenue is going to continue to climb. People are going to continue to buy their products. But that's, if you have to pick between one of the Mag 7s, there are other ones that are trading at similar valuations that are growing. Okay. So I'm not anti the fact of like Apple, for example, but I'm just more bullish on literally 6 other names in the Mag 7 than Apple. So just not a super fan there. You should buy Palantir. I'm not going to buy Palantir. I think that the price of Palantir is so ungodly over extended, and that is even more so going into this next quarter. I mean, fantastic earnings. Okay, this rule of 81 or whatever that they ended up putting out, the rule of 40 that ended up coming in at like 81%, something unbelievable. It's crazy. Okay, they're doing extraordinary things. I'm not anti, like I even said it in my last earnings call. I hoped that Palantir would do well. I think that if you can lead to higher multiples and people can see that there are stocks with higher multiples, I actually think that brings up other comps. Okay. But I also do think that there is like you have to price companies. I don't think that there are standalone companies that you know aren't priced like other companies. For example, I know there are. Well, I mean, obviously there are. I'm not opposed to buying companies that are at extreme valuations, but then people talk about the growth rates as if they're putting up Nvidia numbers or something like this, and they're not at all. And yet Nvidia is growing so much faster. The margins are just as high. They have just an impenetrable moat, and yet the valuation is so much lower. So I just see Nvidia as just being a much better opportunity. Um, let's see here. What would my fair value be? I don't know what I'd have for a fair value. I know what price I'd want to pay for it, and I'd probably want to pay like, I don't know, like considering it's still a great company, although expensive, I'd still pay an expensive valuation. I think that expensive valuation comes in somewhere around the $45 mark or $40 mark, you know? And there's opportunities for them to continue to extend and grow faster, potentially into triple digits like Nvidia did or something like this. But that's to be seen. Are Canadians buying Trump products? What's considered a Trump? Are you just mean U.S. products? Costco, people will pay a lot for stability. I mean, yeah, yeah, it's true. I bought Nvidia today at 113. Too hard to ignore. I agree, Ryan. I think the concerns of Nvidia's moat are so overblown. Unborn, you're saying 10 or 25% for you buy SoFi shares? I don't know what you're saying. Why would you buy Palantir here and sell SoFi 25? I don't know what you're saying, Unborn. I'm not a hater. I hope for Palantir to go up. Okay, I hope so. But I don't want in. I don't have to be a part of every single stock. That doesn't make me a hater. You know? I've got like what? 18 names. I'm good. No, I don't have Palantir. I've had Palantir and sold Palantir, uh, and didn't see this run up. Like, I mean, I missed it. And this is the funny thing. It's like, whenever I tell you guys, like, all my mistakes are selling good names that I've already had. Like, that's another great example. Like selling Palantir, and um, yeah, just falling into the same mistake. It's not that I can't find good names. It's that I hold, or that the mistakes that I do have are all from not holding them long enough. But that's why I hold things for so long now. Not because of Palantir. I mean, I had a very small position in Palantir. But um, Hilarious that you talk about how bad Palantir is, but you're a Tesla bull. Makes no sense. No, because one, like Palantir is so much more expensive than Tesla. And Tesla, I think, has, massive, like, understandable S curves that they're getting into. I don't know what that is for Palantir. You couldn't tariff this mustache. But talking about those tariffs, by the way, unbelievable. Like I talked about in my live stream that I did a mid-market madness, and I was talking about it. I was like, if this is going to go away, it has to go away today. Like it's got to be real soon, or else this is going to be a really long journey. Okay. Thank God we cleared that up. Jeez. Thank God. I mean, yeah. A war of attrition versus the richest country on earth. That's nuts. Still bullish Nubank. Yes, I'm still bullish a lot of companies. I was actually going to talk about PayPal as well. They have earnings tomorrow morning. I'm going to be live at 7 a.m. Hopefully having a couple guests. I know Crossroads is going to be there, Roy. But hopefully we get Couch Investor as well. He's just saying that he might be a little bit late, but hopefully trying to pop in a little bit later. And then we have the actual earnings call at 8. So we're going to go from 7, see the press release for an hour, and then end up getting into the call from 8 to 9, finishing remarks, and then we're going to see the market open. And this one I'm very tentative on for PayPal. Honestly, I'm at a crossroads right now of whether I want to hold PayPal continually. It doesn't fit into my portfolio as an innovative, world-changing company. And those are the companies that I want to buy. If you guys see my portfolio, it's Nvidia, Shopify, Tesla, SoFi, Salesforce, Airbnb, companies that are making massive differences, massive changes. And then, or Amazon, Google, Robinhood, like you can go down the entire list. It's all companies that are trying to make big differences. PayPal is bordering on the side of a value company. And I wanted a much quicker turnaround in that company. And Alex Chris is bringing great things. He is. It just needs to happen quicker. And I think Q4 is the last quarter where I want to see, what are your expectations for 2025? What did you actually do for Q4 of 2024? Like, let's get a good read for this company. Okay. If they end up starting to turn it around, and I mean aggressively turn it around, then I will stay. If they need 12 more months, 18 more months to really start to see growth or something like this, or they're implementing a little bit slowly, I have no problems in selling and redeploying into names that I think are the real growth companies in fintech, which is SoFi, which is Nubank, which is Robinhood. And I think that might be, I can see myself selling tomorrow morning if that ends up happening. So we'll have to see. Yeah, and this is another thing. They have an investor day coming up on the 25th of February. And that might get people very excited. The opportunity for growth there is the opportunity to show off what your growth trajectories are. That's great. That might get people really energized to buy the company. But there's also an opportunity that they just aren't accurate in those assumptions. So in 2021, Dan Schulman, like PayPal under the CEO of Dan Schulman, put out an investor day presentation. They showed off their expectations for going all the way from 2021 all the way through to 2025, and they are not going to hit any of those assumptions. Okay, so this is a big problem for me. Is you can say one thing and then you can also just not achieve it. Okay. Big problemo. Big problem. So let's find this here. I'll try to show you this. I think Crossroads did a post on this about them hitting their guidance, but we'll have to see. I don't know if I'll be able to find it. If someone can find it for me and send it to me on X, that's great. If not, no worries. No worries at all. So also remember, we have the Robinhood weekly tonight, which is also going to be very exciting. There was some news there. For example, Kalshi, the betting app, actually ended up partnering with Robinhood, so then they could offer the upcoming Super Bowl game derivatives. So then you can actually bet on, who's going to win that game. But I love this right here. Starting with sports. Hopefully Kalshi and Robinhood end up getting a much closer relationship, and then they can push out many more products with them. I think that this could be a really great offering. The one thing I absolutely love, man, I love about Robinhood is I just see so little reasons to want to take your money off the platform ever. Okay. If you want to take it off because you need to live your life, okay, spending is the highest form of spend. 3% cash back. They're really starting to push out those cards now. I'm seeing a lot of people online stop complaining and actually say it's coming in the mail. Good. Okay. Then if you want to invest in your own life, okay, they have ETFs. They have all these different products that you could possibly want. Every individual stock that you could name. They have derivative products now. Futures are rolling out, index options, straight options. You can write options, everything. Okay. They've got margin if you want it. They've got all the tools. And they'll continue to expand on that. Even on a desktop, they're rolling out more features to Legend. I know that a lot of people didn't think that that was the best they could do straight out the gate. But also, the difference is that Robinhood pushed out a product that was a 60% product. SoFi would never have rolled that out. So the people that are even okay with where Legend is today, you would never even have that at SoFi because they'd work on it for 2 more years before they think it's perfect before they roll it out. Okay, so I think that that's important, that Robinhood will a little bit like rush a product out and then work on it after people get their hands on it. So, but it just allows for a very fast, product rollout. Let people use your product, iterate on how they're using it, push out updates quickly, move on. So this is something that I'm very excited about for Robinhood, because they just, once again, are starting to dominate in other areas like more fun contracts or, fun betting where you can bet on Super Bowl contracts, or whether this is going to be for CPI or Fed's funds rates, weather forecasts. Like, there's all sorts of betting that they could end up rolling out that people do want to bet on. These markets are huge, but that would involve people taking their money out of Robinhood to then bring it to Kalshi. What's the point of that? Now, what's the breakdown between these things? How much is Kalshi actually getting paid? How much is Forecast Exchange getting paid, which was the other one that they had for the election betting nights? Between these two, they can start to build out plenty of products, but that's going to be a little bit. Tanner, making me feel less bullish on SoFi by talking so highly about Hood. I mean, it's not my goal to make you feel bullish. I think I just need to tell you the truth. Now, I am super bullish on SoFi, but a lot of where they're putting in their work is in things that are background or from institution to institutional products, like the loan platform business, all of these things. But SoFi Invest, I mean, Anthony Noto can talk up his book all he wants. It's a shit product, in my opinion. I don't like it comparatively to Robinhood or Public or really any of the other brokerages that do a better job there. Their desktop version of SoFi Invest is non-existent. And I'm not a super fan. Now, a lot of people can think that it's basic and that beginner investors can like that product. Absolutely, like 100%. But a lot of those people don't like Robinhood, or they potentially have not discovered Robinhood, or they just want a brokerage that's close to their bank. And that's perfectly fine. Okay. Like, I actually think that there's a lot of product needs for those types of people. But if you're putting them up one to one, who is innovating more? It is Robinhood. Okay. But innovation doesn't necessarily mean stock growth either. One is also a bank that can make a ton of money and not have a lot of fees on the other end. Like just marginally, they can be so unbelievably efficient in their margins because they have those regulatory approvals and they don't have to pay a lot of third parties. They own their own tech background. They have their own bank. They could do everything in house, almost have a perfect margin. It's crazy. Like, I'm not trying to tear down SoFi here, but Robinhood does a very good job, and people need to give credit where credit is due. They are like one of the best teams in terms of engineering and financial services, if not the best. Coinbase is really great. Nubank is unbelievable. Robinhood's unbelievable. I think SoFi is good, but I would put them in a tier below all those S tier names. Yeah, see, but even this, like, I would say Wealthsimple, which is the company that I use here in Canada, doesn't have great active trader products. Okay, I don't even think that the charts are, well, I know, actually that's not true, but whenever I first got Wealthsimple, the charts weren't even in real time. But it didn't matter to me because I don't research on the brokerage apps that I'm on. I just use them as the exchange. I'm doing all my research externally, and then whenever I hit buy, the purchases are actually going through. It's happening. So for a lot of people, if they're looking for that type of experience, SoFi Invest might be perfectly fine. The only problem is level one options. A big part of a long-term investor's, tool set is writing options on their long-term portfolios. So that is something that I'm just like, roll that out, please. I think that they're seeing that, oh, well, the people that are on our platform are all the really basic investors. It's like, yeah, because all the advanced investors left because you don't offer those products. So, yeah, there's a little bit of that. Well, simple marketing is on point. They use a lot of influencers to push it. I mean, I've never gotten, well, actually, that's not true. They reached out to me one time whenever I had like 2,000 subscribers because I made a video on them and asked me to do a video for them. And I said no because anyway, I'm not going to go through that, but they didn't want it to compensate me well. And I'm not here to do free press. I just make videos on what I want to make, unless it's a sponsored video. But yeah. Ethan says he's bullish on both SoFi and Hood. Plenty of total addressable market for multiple winners in the fintech space, and they address different needs. 100%. People need to understand this. Like, think about how much Robinhood and SoFi have grown, and then look at the total addressable or look at the market caps of the big banks. They've just grown. Like, they're just getting larger. Okay? The total addressable market for large banks is trillions and trillions and trillions of dollars. There is so much pie here. It's crazy. Okay. Everyone can get fat. And that's really, really great. Those are the markets that you want to be in. It's also why some of the bearish people on SoFi say, oh, well, SoFi needs to get out of the personal loan segment because that individual market is a little bit smaller. And I actually disagree. I think that traditionally personal loans that are funded over a 7 to 10 day period are garbage. But whenever you give someone a personal loan that's funded same day, potentially instant funding, that completely changes the total addressable market for personal loans. It might as well be like a credit card and at a lower interest rate. So if you're paying 13%, people will go, why would you pay 13%? Why would you pay 29% of a freaking credit card? Like, use it as debt consolidation, pay it off. If it's a open loan, pay it off and you don't have to pay the interest. you know? Now that can hurt investors if people see prepayment coming back, but I promise you they want the loan regardless. So I've been thinking about this, Rat Pack. Let's take this issue because I don't know 100% the answer, but I'll tell you my thought process. If Trump eliminates the Department of Education, would this be bullish for SoFi as student loans would be all private? I don't necessarily think it would be all private. I just don't think it would be all federal. So what I think that means is that a lot of states would do their own individual loan program. Okay. That's where I actually think it would go to. Now, that's still twofold for me. One, the pricing would be so spread out across 50 separate states. I think that there would be a lot of arbitrage for SoFi to come in and say, hey, you know what? This individual state is not actually offering great rates because potentially maybe they can't separate their or they have a really hard time of knowing like what percentage of their student base would end up paying these back or stuff like this, like just having a real hard time underwriting them. So in that way, with 50 separate potential lenders and private climbing as well, that could end up growing. Okay. And I mean a lot. And then you could also see SoFi potentially going to those states and saying, hey, we could potentially underwrite these loans for you or service these loans for you, not underwrite. I should have said service, but potentially they could underwrite. I don't know how that would work. But we could service those loans for you, similar to what Mohila does, because we have the rights to do that now. And we could bid for not federal, but statewide servicing for loans. And they could win contracts on that. That seems interesting to me. Okay. In the next breath, this could also be very different because what if the Department of Education ending up closing these, or if it does get closed, then takes away the guaranteed student loan program, meaning students, regardless of their credit hit, because that's essentially what it is right now, is that students are guaranteed to get a loan. But what if that ends up going away and that colleges just simply cannot charge the amount that they're charging because the lender doesn't want to give that out and it's not federally backed by it's not backed by the federal government. And so the entire student loan business just sort of corrodes underneath itself. So I've been thinking about that as well. And just like, if it does go away, does it just sort of kill the market? And at what point does that hurt SoFi? Because like, I don't think a lot of total student loans is priced into SoFi's business. Potentially, these could be much safer, much smaller loans. Instead of giving out $80,000 loans, you're giving out maybe $10,000 loans, and it's to many more people, and the payback rates are much higher. It could be a completely different type of loan. So it's interesting, but I don't have the answers. Okay, let's see here. Trump wants U.S. banks in Canada. SoFi is coming your way, Tanner. I just don't think that this is going to happen. I think that he'll have a hard time with this one. If it changes, boy, oh boy, would I love that. I don't think this changes. And I think that the average Canadian doesn't want this to happen. And we would fight this. I do want it to happen. I want more competition. I'm aware that, I think with a capitalist mind, the customer should have some responsibility in picking the institution that they feel is safe and best for their own needs. I don't think that should be something that is mandated all the time. Do your own research. But in the next breath, I don't think that a lot of people look at banks that way. I think almost they look at it as if it's not a private entity, and they almost look at it like it's government backed. Canada, going through the great financial crisis, did not get hit. Not very hard. Not very hard. Obviously, prices went down, but really it was an American problem. Canada was kind of very separate from that because we were not engaging in these subprime loans, not nearly as bad. And so we've had a very conservative, banking system that has worked out to their benefit during really bad times and worked very against the consumer during really good times. Because then we don't get as favorable rates. We don't get as good of products. We don't get that innovation. Okay. You can still walk into a big bank, set up a brokerage. Like, I mean, today, and you'd pay $10 per buy and $10 per sell in a brokerage. I'm talking TD, RBC, like the biggest banks in all of Canada. Crazy rates, terrible. You couldn't find that in the States. Okay. TD Ameritrade in America is commission free. TD Waterhouse in Canada is $10 a buy, $10 a sell. I don't pay that. So I really want that competition to come because it would make it would force TD and all the other banks to increase their APYs, to offer better rates on loans, to just like any other thing. More competition means, margins get crushed, but it's better for consumers. As long as the protection of the consumer is set up. And this over a 30-day, tariff war is not something that's going to be set up, in my opinion. I hope it does. I hope I'm wrong. But yeah. It would cause a mini boom in Canada. I completely agree. I think so, because it's not just the banks coming in with branches. It's also banks coming in with institutional money. Talk about the asset values of Canadian companies versus American. Why is there no tech industry here in Canada? And if there is, but it's few and far between. Did I say cracked? Cracked is like good. Oh, sorry. Cracked like this is not good. No, this. Why can't Shift 4 drop to 100 again? Can't be going off stock prices that way. Okay, right, ladies and gentlemen, I have cracked the word. If someone says like, "Oh man, that guy's cracked," that means like he's potentially good at that thing. I'm still young at heart. Okay, I got to do both. I got to put on my professional hat and talk some stocks, but I also got to stay young with the hip kids. What time is Hood Weekly? 9:30 p.m. Eastern Standard Time, ladies and gentlemen. That's 30 minutes from now, 27 minutes from now. But B-dubs, you have gray hairs now, okay? Come on. I actually don't know if you do, but that's funny. I gotta go. Bullish on Hood Weekly, Ethan. 100%. Not only is the weekly doing great, the company is doing great. We are making money in this market, ladies and gentlemen. The fear is fun. It allows for crazy opportunities. Nvidia's back to over $118 a share, and I expect great things for earnings, as long as they guide well. Thank you all so much for watching. Really do appreciate your time. If you want to support the channel, subscribe down below. That's all I ask you. Okay? It's not the only thing I ask you. It's the only thing I'm asking you right now. Bye for now.